Welcome, everyone. Thanks for joining us today for this webinar on the Trump tariffs. I can see that people joining us as we speak. We actually have more than 550 people registered for today's webinar, so we do hope that as many of you as possible are able to join. Today's webinar will be recorded, so please do keep an eye out for that recording on LAWASIA, on the LAWASIA website and on its YouTube channel. You're welcome to submit questions during the webinar through the Q&A box. What we will do is I'll ask whatever questions I have and have the discussion that I want to have with the speakers, and then we'll reserve some time at the end, maybe 15 or 20 minutes for your questions. So please do pose whatever questions you have in the Q&A box, and hopefully we'll be able to get to as many of those as possible. Although, of course, I do hope that we answer as many of those questions as we can in the course of the conversation. And with that, let me just do a quick introduction of our speakers. As I said, we're going to be exploring how the Trump administration's tariff policies have reshaped economic and tax landscapes in Asia. I mean, of course, this isn't just about tariffs. It's also about global trade friction and how that affects fiscal strategy, corporate behavior, international relations, trade supply routes, and those topics and those sorts of topics. And we have the perfect panel, if I may say so, to join us to discuss those. First, can I introduce Mr. Yang Wang, partner with De Heng. De Heng is one of the largest Chinese law firms with 6,000 lawyers and 46 offices in China. But perhaps I'll turn it over to Yang if you'd like to just give a quick introduction of yourself.
All right, thank you. Thank you for inviting me to this conversation. Also, thanks to our members of the committee for sharing your time with us today. So as Vinik already said, we are a full-service Chinese law firms in the mainland China, and I myself is actually a part of our Shenzhen office, and I'm also a registered foreign lawyer in our Hong Kong office. So my practice really focuses on cross-border investment trade and corporate compliances, and a lot of my work actually has to do something with Chinese company going nearshoring to the Southeast Asia. And they are heavily impacted by this Trump tariff war. So yeah, I'm really glad to be part of this discussion today. Thank you.
Thanks so much, Yang. Next, if I could just introduce Mr. Sachit Jolie of India. He's a senior advocate from New Delhi, specializing in a range of, he specializes in commercial law generally, but especially in tax law. Sachit, would you like to give a quick introduction of yourself?
Thanks, Vinayak. Good morning, good afternoon, good evening, depending on where you are. It's always a pleasure to be amongst the LAWASIA family. Now, quickly, like Vinayak said, I'm a senior counsel from India. I specialize in taxation and cross-border investment laws. These are exciting and challenging times for everyone, except if you are in the US. So, looking forward to a meaningful discussion today.
Great, thanks so much, Sachit. And last and certainly not least, Pradeep Singh Khosa from Singapore. He's a partner with Withers and also the head of litigation in Singapore. Pradeep, if you'd like to just quickly introduce yourself.
Thank you. Well, depending on where you are, good morning, good afternoon, or good evening, everyone. So it's very good to be here, and I'd like to first say that it's a real pleasure to be a part of this panel alongside my friends Vinayak, Yang, and Sachit. I also like to express my thanks to the organizers at LAWASIA for putting up this webinar on a subject which has dominated conversations around the world for the last 6 weeks or so. I'm with Withers, as Vinayak mentioned. It's a global law firm with offices across the world. I am based here in Singapore, where I head up the Singapore litigation practice. I specialize in disputes, cross-border disputes, both in arbitration as well as litigation. And like Sachit said, this is an interesting and timely topic, and I look forward very much to having a useful, if not an informative discussion.
Great. Thanks so much, Pradeep. I mean, I get very grateful to be here moderating this. Apologies from my partner, Sarvana Kumar, who is supposed to be moderating this, but I'm certainly very happy to be here because as primarily a disputes and arbitration practitioner, I myself really don't know that much about the impact that the Trump tariffs are likely to have. So I'm going to play dunce in this conversation and really look forward to getting everybody's views on this. But just to sort of set the scene, I mean, if you're logging into this webinar, you probably already know quite a bit about the Trump tariffs and be following the news. But for anyone who's been living under a rock for the past month, Trump, of course, on the campaign trail, made a very big deal of his intention to introduce some kind of tariff policy. He, of course, did that with a raft of imposing tariffs on a raft of countries and territories. He did so on the basis of a particular formula, and perhaps we'll get into that formula and how that works, but and that has had a major effect on global trade and international relations. With that very brief and very amateur setting of the scene, perhaps I could turn to you first, Sachit. What do you think were Trump's primary objectives in setting those tariff policies? Particularly, I mean, we're all practicing in Asian nations. What do you think his intention was, especially with respect to Asia?
Thank you, Vinayak. Well, let me first say this, that look, this is once in a century measure from the US. I don't think it's, you're going to probably see this kind of an economic shakedown in the near future. And with any of these kind of, as I would call it in military terms, bombshells, since we have been seeing a lot of military action these days, is not generally driven by one single agenda. In my view, I would divide it into three parts. That's my analysis, and of why this was brought in. President Trump came with an agenda of making the US great again. But he also inherited, when he took office, a 1.2 trillion trade deficit. Now, how do you change that? You change that by trying to get manufacturing and services back into US, which has been offshore. How do you do that? You impose such tariffs that it becomes virtually impossible to import into US. You have to then move back into the main fold of the US. So that was one pure economic perspective to it. The second, which is more of a personality trait, which I felt was, which we also saw a little bit of when he was in the Trump 1 administration, that President Trump is not for multilateralism. He's always been a bilateral person. He will negotiate. He's a great negotiator. He will negotiate individually with countries, whether it's the environmental pact, whether it's the economic pact, whether it's military pact. And we've seen this all. He's pulled out of all environment pacts. He's now threatening to pull out of the NATO or not support NATO when it doesn't work for him. Economically, we've seen he's now given a thumbs down to the WTO, no multilateralism. So he wants to have a bilateral. And we saw what happened in Saudi Arabia 2 days back. He wants to have one-to-one bilateral agreements. Now, whether it works for him or whether it works for other countries, time will tell. But that seems to be his agenda, that there is no one size fits all. You have to go sector-wise, you have to go country-wise to come to a trade agreement. The third, which I believe is also a crucial element to this policy, is using this economic bilateral agreement with individual countries or bilateral trade with each country as a measure of, or as a tool to have political say, or I have to have a political clout to have geopolitical control over some of the countries. Now, we saw a very strange statement in Saudi again these 2 days back from President Trump, where he said he brokered the peace between India and Pakistan in the recent conflict using his economic power. Now, from our side, from India, it's always been denied that that's not the case. But look, he is using that from his side at least as a tool of negotiation. So I think, or as a tool to gain political clout. So, to conclude, I think there are 3 factors: his domestic, his domestic vote bank, the opposition to multilateralism, and third, to gain political clout. So I think all those 3 factors, in my view, have come together to shape this kind of a once-in-a-century bombshell, as I would call it.
Well, thank you, Sachit, for, if I may say, an excellent summary in an almost impossible short amount of time. I think you've beautifully framed the strategy and anyway where all of this seems to be coming from. I think it might be useful now to dig into a bit more detail into some of the policy. I should say that, as we were discussing before we went live, I mean, this is an extremely fluid situation. So one can only hope that anything that we say now is going to be relevant even an hour from the time this webinar broadcasts. But it is useful, I think, to dig into the situation now and take a snapshot of where we are. And so, Pradeep, if I could just turn to you. I mean, obviously, it's having a pretty wide and important impact on industry in Asia in general. But what specific industries and goods and maybe supply chains do you think is likely to be affected by the tariffs, either as they stand now or perhaps as they've developed up to now?
Well, thank you, Vinayak. And like you, I echo your sentiment that I think Sachit has, in a short space of time, given us, I think, an almost masterful overview of what one might think Mr. Trump's objectives are. And leaving aside what his objectives might be, at its core, the instrument of tariffs, I mean, its use is, as I think Sachit himself said, unprecedented. Tariffs, it's not unusual for countries to levy them on goods being imported or exported out of the country. They're a source of revenue. They've also been employed in the past as a protectionist measure, but their use in this instance and the scale and extent to which I think is unprecedented. The tariffs are high, and by historical standards, they're exceptionally high. I think they're the highest that they have been in almost 100 years. And some of the highest tariffs have been aimed at Asia, which, as you can imagine, has an foreseeable serious impact on Asian industries and goods, especially Asian industries and goods that have a strong market in the US. And if I had to pick one which comes to mind as being most severely affected, I would think it would be the automotive sector. I think at the beginning of April, Mr. Trump announced the imposition of tariffs on the automotive sector amounting to 25%. Those tariffs affected cars, they affected trucks. And I think he later announced 25% tariffs on automotive parts with effect from the 3rd of May. And so that basically means that cars and parts now being imported into the US are going to be at least 25% more expensive. And if you think about it, a vehicle or its parts, it's a big ticket item. A 25% tariff on a good or an expense of that nature is going to have a serious chilling effect on someone's decision whether to buy or not. And that, as you would see, is seriously affecting demand, and that in consequence is affecting adversely the automotive sectors in Asia, for example, South Korea and Japan. They're automotive powerhouses. Korea's automotive sector comprises 15% of the country's total exports. Japan's automotive sector comprises 20% of the country's total exports, and the majority of those exports go to the US. And the imposition of these tariffs means that those Korean-made cars, Japanese-made cars and parts are a lot more expensive, and that's going to lead to a decreased demand. And some reports, for example, have suggested that Japan is going to lose up to $17 billion in terms of car exports, which are going to decline because of the tariffs. So if I had to say one industry that comes to mind, I would leave the automotive industry. And of course, the contraction in demand in that sector is going to have indirect knock-on consequences for associated industries like steel, aluminum, and rubber as well.
Thanks so much, Mehdi. I mean, that's really, I think, a really great starting point for getting into the effects on particular Asian economies. I mean, we're very lucky in this webinar to have representatives from 3 of the most important economies in Asia. And so now maybe I could turn to maybe the most important, or I mean, apologies to such a joint most important economy in Asia. Yang, okay, what I want to ask about is how Trump's tariffs affect trade flows between the U.S. and these major Asian economies. Perhaps you could talk about first how you see the effect on China. I know you mentioned, we were discussing before we went live the recent negotiations that Trump has just had with China. Perhaps you could give us your perspective on what the effect has been on Asian economies like China's economy so far, and what your view is of those negotiations.
Yeah, sure. Thank you. And I think this is really a good time that we can actually kind of take a step back and just to review what actually happens. I mean, it's very hard to imagine, but in just over a month, we're just looking at some unprecedented, massive, or some will even say as arbitrary trade policies implemented by the Trump administrations. And these policies have significant effects on these trade flows between the U.S. and the major Asian economies that you already mentioned. So because you already mentioned that China is probably the most important components in these overall trade flow. So I will probably just start with the Trump's tariffs impacts on China. So yeah, you mentioned that the good news is that earlier this week, the U.S. and China finally reached some long overdue consensus and agreed to roll back from this tit-for-tat strategies, committing to a de-escalation of the trade war. So that is good news. And we're now seeing that Beijing is lowering levies on U.S. goods to 10% from the eye-popping 125% for 90 days, while Washington reduced their levies on Chinese goods to 30% from the jaw-dropping 145%. So yeah, while this is good that the trade war is finally cooling down, or probably it would just maybe it's gonna last, or maybe not. But I just wanted to take politely point out that this post-U.S. China joint statement tariff rates, it remains too high for Chinese exporters. So let's just remember that this trade war between U.S. and China doesn't actually start from this year. It actually starts way back when Trump taken his first term in the Oval Office back in 2018. So in that regard, China is probably like a veteran in this battle against the U.S. in this trade war. So at the current level, we will have to remember that in addition to the 30% tariff that we already mentioned, which consists of like a 10% baseline tariff and another 20% fentanyl tariff, there is actually an additional Section 301 tariff, ranging from probably from 10 to 25%. That was imposed by Trump's earlier decisions. So if we're looking from the Chinese exporters' perspective at this time, we'll probably be looking at a cumulative source of U.S. tariff of like 40 or even for some of them, 55% on Chinese goods. So these will continue to form a significant barrier amid the bilateral trades between two nations, and will further fuel China's momentum to nearshore. So that is probably my perspective.
That's very interesting. I mean, thank you. I think, again, an excellent summary of the immediate effect on Chinese-US trade relations. But see, like from the Malaysian perspective, speaking as a Malaysian, we enjoy a very warm trading relationship with China, Singapore, and India. In fact, I think those are our top three in a different order anyway. Outside of the United States, our top trading partners. And I just wonder if you've seen from your perspective in China a kind of building on or maybe forging of new partnerships in Asia to try to readjust specifically in response to these tariffs.
Yes, I'm actually quite glad that you mentioned Malaysia's perspective. I mean, China and Malaysia are important trade partners to each other. And once again, if we're taking China as an example, we are seeing that China is strengthening up its economic tie with Malaysia. We all know that President Xi visits Malaysia in the mid-April, and during his time of visit, he is pushing forward a China-ASEAN free trade area upgrade protocol to enhance its regional trade resilience. And during his time in Malaysia, the two nations actually issued a joint statement. I think this was on April 17th, which emphasized collaborations in trade, investments, and also regional stability, and echo for the return of multilateralism under the WTO and also the UN frameworks. So, and we can also see that there are a huge path. I think the 31 memorandum or MOU that were signed by the two nations covering various sectors like the media and information cooperation, security and development, education and research, and so on. So let's just not forget that these MOU were signed under a background where Malaysia is also face a 24% reciprocal tariff on its goods to US, even though it was later paused for 90 days. So we can definitely see that there is a mutual agreement between China and Malaysia to continue their partnerships to counter this protectionism and deepen their trade tie, just a direct response to Trump's tariff.
Yeah, that's very interesting. I mean, maybe Pradeep, I could ask you from the Singapore perspective, the general effect, of course, but what would you say the impact has been on exporting Asian? I mean, I suppose almost every Asian country is an exporting economy, but what would you say would be the immediate impact on the export and manufacturing sectors, especially those which are heavily reliant on trade with the United States? I mean, from Malaysia's perspective, for example, I think the United States is our second largest trading partner after Singapore. I mean, what do you think the effect would be on Singapore? I suppose Singapore does export, but primarily services. I'm not sure if those are affected by the tariffs, but what would you say would be the impact on exporting countries?
Well, I think the short answer is Singapore does export some goods to the US, but they tend to be high quality products like electronics, semiconductor chips, or pharmaceuticals. And in fact, Singapore is running with the US a trade surplus. In other words, we sell a lot more to the US than we buy from them, which might explain why Mr. Trump has been charitable enough to spare Singapore with just a 10% tariff. But the tariffs that have been applied across a number of other ASEAN countries, a number of other Asian countries, they're a lot higher, and I think they tend to be upwards of 30%. And across Asia, I think that's starting to have a serious effect at a couple of different levels. Asian countries rely quite heavily on manufacturing goods which are exported to the US, particularly in sectors like electronics, machinery, textiles, and apparel. China, for example, is known as the world's factory. It's a manufacturing superpower. Its manufacturing output far surpasses that of any other country, and it produces a vast array of goods, from low-end items to high-tech products. And in 22, China was the top supplier of goods to the US. Now, in the 6 weeks or so that the tariffs have been enforced, I mean, now they have come down quite significantly, but the data has started to emerge. And in April 2025, Chinese exports to the US declined by some measures 21%. And manufacturing activity across Asia is starting to contract, with companies struggling with weaker demand from the US for the finalized products, and the consequent weaker demand for the raw materials used to manufacture those products, which will ultimately be exported into the US. And manufacturing activity has also, because of its decline, it's starting to now cause businesses to not invest in capital expenditure. There's a fear of future tariff policy changes. And I think Satya touched on this, Yang touched on this as well. In the space of a few weeks, a month, last week, in fact, so much has changed, and that uncertainty is really just not good for business. And so what you have is a situation of reduced demand directly, and that affects indirectly a number of other ancillary supporting industries. And consequently, you are now starting to see revisions to economic growth. China's growth, for example, has been downgraded for 2025 to around 4%. Countries across Asia, their economic growth has been projected to be cut by at least 0.5%. Japan, who we spoke about earlier, with its strong automotive sector, its GDP growth for this year is intended to be cut by about 0.8%. So broadly speaking, these tariffs, in the short space of time that they have been announced, and I think they will then postpone, they've had a chilling activity across manufacturing activity across Asia, and it's starting to really hurt economic growth, at least for this year.
That's a pretty grim outlook, but the figures are what they are. I think, you've raised some really critical points. We'll have to turn back to those points because at some point in our conversation, I think we'll have to talk about what we do about that chilling effect and the effect on growth and how we adapt to that. But Sachit, first, I'd like to talk about the tax implications because that is one of the topics of this webinar, and I understand there's going to be some significant effects. But can I just ask specifically how the tariffs first of all, maybe you can start with a general question, how you see them affecting general tax revenues in Asian exporting countries?
So let me just first state some statistics. And I think for me, the tax in each of the countries will be dependent on the sector you talk about. I think Pardeep referred to the automobile sector for once. And in some sense, I could feel his pain. Singapore anyways has the highest, the cost of buying car is phenomenal. If you now add tariff, it's going to be killer. So, it's the problem there. But, let's look at textile for a minute. In the initial, the tariffs announced, there was a 54% tariff on Chinese exports. There was a 46% tariff on Vietnamese exports. There was 37% tariffs on Bangladeshi exports to US. And in India, it was 26%. Now, 26 as compared to 54 may sound competitive, but it's going to be, virtually impossible to then compete with locally manufactured, maybe US goods or probably Turkish goods. I don't know what the tariff there would be, but so it's going to be a sector-wise tax changes which each country may have to bring about. And if I move to electrical goods, then it was quite shocking. 54% again on China on smartphones, and there was some news about the tariffs being taken up to about 100%. But let's look at the initial tariffs, which were more thought after. All the rest of them were retaliation. So you had 54% on Chinese smartphone and electrical goods. You had another 46% on Vietnamese manufactured smart goods. India again was 26. So relatively, we were slightly better. In the pharma sector, we had no duty on it, probably because the US needed Indian manufactured generic pharmaceuticals. So, I guess it will be from an impact perspective, it will be country specific, it will be sector specific. And the tax rates or the tax incidences or the tax compliances will also change sector-wise and probably country-wise. I really don't think there will be a straitjacket formula to have for a country to adopt, as opposed to to the tariffs being imposed, unless you take the hardline position which China took. You retaliate with another round of tariffs on the US. But I don't think most of the countries are in a position where China is. So really, I think it will go back to the bargaining table to A, get the tariffs down, B, then calibrate the local taxes to make the local industry more viable. I mean, I really, in this short period, I really don't think I can give you a solution or an impact analysis for each of the sectors. But I think these are broad points which I looked at in these three sectors.
Yeah, no, I mean, the impact is obviously going to be, I mean, it's obviously so substantial that each sector and subsector would require its own sort of separate analysis, and that there may be added complications to that. But since you brought up the question of negotiation, perhaps I could ask from each of your countries' perspectives, what negotiations have happened so far? I mean, Yang has spoken about the most recent round of negotiations. Could I ask, how do you see that strategy going forward? I mean, from the Malaysian perspective, because the United States is our largest trading partner, while obviously there's some hope that we'll have some basis on which to negotiate, I think there is some feeling in the country that we may just have to cave because we just simply cannot afford to enter any kind of trade war with the United States. So we obviously we will have our own negotiating strategies with the administration and with Mr. Trump himself personally. But maybe I could start with you, Sachit, since you raised the question. What negotiations have happened between India and the United States so far, and where do you see that going?
So what we are hearing is that the negotiations are really at a very advanced stage now. We're looking at probably some sort of an arrangement, if not a proper bilateral agreement, by the fall of 2025. So what we've been hearing is that there is great deal of conversation and constructive conversation on sector-wise discussions have fructified. But I think I'll tell you one more intangible which will play a part in these negotiations, and I believe that could really shape the agreements that we have with the US, is how is US dealing with China for once, because there are no bones about it, we are competing. How does China deal with how does US deal with China? What is the sort of arrangement they get into with China? And what is the sort of an arrangement they get into, let's say, with Japan for electronics and for other manufacturing goods with Vietnam, or for clothing with Bangladesh? Because those are our competitors in I'm talking sector-wise. Philippines, for that matter, for IT services. We would want an arrangement where we are more competitive than the tariffs or taxes on those countries. I think that's going to be one of the factors which will play a huge role in having a lasting agreement in this year, or having a makeshift or maybe let's say a temporary arrangement with the US in this year. I think that's my take on it. We may have a final arrangement, but if those negotiations with China, Vietnam, Bangladesh are still going on, we may have a an interim arrangement for the time being.
So, I mean, as with everything when it comes to these tariffs, we will have to sector by sector sort of watch this space and I suppose see what shape those negotiations take. But the Singapore Prime Minister gave a very strong statement in response to the tariffs, and is certainly very well received in Malaysia. What was the response? I mean, how was that speech received among the business community in Singapore? What is your feeling about not just how it was received, but where the business community sees this going forward in Singapore?
I think what Prime Minister Wong said basically is that the rules-based international order that we've become so accustomed to, you must no longer expect things to remain that way. And truth be told, in this part of the world at least, that's hardly a surprise, because from the time of Mr. Trump's first administration, efforts have been made, say, on the part of China as well as a number of ASEAN countries to try and diversify their supply chains and export markets. And the latest round of tariffs, if any, have simply accelerated that process. And so what Prime Minister Wong said was, in a sense, as you would expect, very much what you would expect him to say. He's just explaining that things are no longer as they would be. And so we have to adapt. Now, a number of countries have taken a different approach in responding to these tariffs. China has sought to retaliate. China and India have also lodged complaints to the World Trade Organization that what the US has sought to do is really not compliant with its obligations under World Trade Organization rules and agreements. But that really isn't going to come to much. Even if you engage the WTO's trade process, the dispute resolution process, it contemplates first bilateral negotiations anyway. And if there is no satisfactory resolution there, then the matter is adjudicated. But once adjudicated, there is an appeal, and that's where your process breaks down. Because the appellate body at the WTO level is paralyzed. The US has, over the last years, blocked the appointment of judges to that body. And so if you seek to basically engage the US to the World Trade Organization, you're going to find yourself sucked into a black hole with really no meaningful resolution. And the fracturing of the World Trade Organization and its ability to resolve these disputes brings us back to what Prime Minister Wong is saying. This rules-based international order that we've become so accustomed to is really no more. And so what do? Countries like Singapore, their response hasn't been to be legal. I think it's sought to engage the US in diplomatic efforts and negotiations. And even then, truth be told, there are not many cards to play. President Trump has made clear that the 10% baseline tariff, that's non-negotiable. And that's where Singapore is. And so what Singapore has sought to do is to engage diplomatically in negotiations and try and find creative solutions. Creative solutions being, for example, one of Singapore's main exports out of Singapore into the US is its pharmaceutical products, is to seek concessions on the export of that class of products into the US. And at the same time, try and seek a loosening of restrictions on the import into Singapore from the US of semiconductor chips and the associated material that goes with it, which is important for a number of industries here. So I think different countries obviously have different approaches, but we have decided to go down the route of being quite realistic about the new world order we live in, adapt to that. But I think at the forefront of our strategy has been trying to engage the US and diplomatic channels, while concurrently, I think, strengthening regional alliances and looking to find other markets and supply chains.
Yes, I think we definitely have to come back to this idea of re-looking at supply chains and how all of that is going to be restructured. I mean, my real question about that was going to be whether that's going to be lasting and what the lasting effects are. But before we go there, yeah, I'm going to ask you what may be an impossible question, which is, where do you see the negotiations between China and the United States going from here? I mean, I appreciate that's a very difficult question, but perhaps you could answer that. And also, if you could answer what the reaction of the business community, generally speaking, has been in China to these rounds of negotiations, whether they're hopeful, and maybe where does the business community see all of this going?
Yeah, yes, I would agree that this is a tough one because from the very beginnings of our meetings, we've already said that this is a ever evolving sorts of issues. So not all of the issues have been settled yet, fully settled yet. Even if we are looking at the detail of the U.S.-China joint statement, we are already seeing some part of the tariff. I believe that will be the 20% or 24% of the tariff is only being put on hold. So for the initial period of 90 days. So what will actually happen after 90 days? Is China going to give a little bit more and should be more taking a step back on their non-tariff sorts of countermeasures, like their restrictions on the rare earth exports? Will U.S. making a gesture and trying to loosening up their measures on Chinese goods? Are we going to see the e-commerce, the old ways of doing e-commerce getting back again? Well, it's really going to be very tough for that. But I think because both Sachar and also Party actually speaks about the positions that the Asian countries should be taking in terms of their negotiation with the US. I think ultimately, because as I mentioned, China is pretty much the veteran in its war against US. I think back in 2018, when the first trade war already started, there are not a lot of the countries are not directly affected by this trade war. So I think the reason why China taking a very, some will say, aggressive sort of attitude, like they are posting this sort of we will not kneel sort of attitude towards US, is because they have already been there before. They know what will actually happen. They've already done some calculations regarding what will actually going to happen. So I think what we can see from these sorts of newly released joint statement is that I think both the U.S. and the China government have already come to agreement as to how much further they can actually go. I think they both agree that it will be a better time. It will be the best time that they can actually just kind of roll back a little bit on what they're doing. And I'm not saying that other Asian countries should be taking the same attitude as China. I believe for each of the Asian countries, they should be like taking a position that should reflect their own interests. Like I think this party was said, Prime Minister Wan have already released their statements to kind of articulate the stance of Singapore's, and I think Prime Minister Carney of Canada, they also like issued a similar statement where they are saying that we are not counting on the good old ways of doing business coming back. The partnership with the US is not going to be like before. But I think once we get these sorts of things clear, then we can just like move on and to see if we can actually have a better position to negotiate with the current U.S. government, and perhaps there will be good news come out. I don't know. We should all be hoping for that. Yeah.
Yeah, I'm sure we're all hoping for a reasonable and there's like a reasonably negotiated outcome that's probably the best result for for businesses across Asia. But in terms of how businesses are reacting now, given the uncertainties, I mean, Pradeep, I think, put it very well when he said that uncertainty is really not great for business. How are Chinese businesses trying to build their resilience to this uncertainty? I mean, for example, have you seen any shifts in supply chains? I'm not sure if perhaps there's a way of negotiating the tariffs so that, I mean, for example, if there are tariffs on finished products, is there a way of readjusting your supply chain so that you're avoiding sending finished products to the United States, or maybe just readjusting your supply chain so that your end supply is no longer the United States? I mean, where do you, like, how are Chinese companies building that resilience now to that uncertainty?
Yeah, sure. Early on, you mentioned about how the Chinese business community thought about the tariff. So I think they are optimistic about probably the outcome of the negotiation between the US and China. But on the other hand, I think they are not just standing there waiting for the outcomes to come. So we're already seeing that there is a massive source of a movement of Chinese company go nearshoring to the neighboring countries. So it was a way of doing business to trying to circumvent the trade barrier that we already mentioned between China and the US. So I think this is probably the moment where we should be probably should be dive a little bit more into that. So as we can see, the Chinese goods nowadays were rerouted to countries like Mexico and also other ASEAN's member states. And I would like to say that for a lot of the Chinese manufacturers, they'll continue to see countries like Vietnam as a transshipment hub. And this is reflected in both the China's direct investments in Vietnam and also Vietnam's heavy reliances on China's inputs for much of their own exports. So I myself actually have the pleasure of being to Hanoi before, and I visited the Ministry of Planning of Investments. From what I know from there, China contributes almost 1/3 of the new investments in the past few years, and China also leads the newly registered projects in Vietnam, mostly in the northern parts, some suburban areas around Hanoi or others in cities like Haiphong. So I also, speaking from a personal experience, I also have clients that are very itching for the ideas of making a new homes in Vietnam, and they are going there, building up new factories. So yeah, this is something that was happening for quite some times. And this unfortunately caused some problems for Vietnam because in the recent years, Vietnam's U.S. trade deficit widened, and Vietnam is also hit with a 46% reciprocal tariff in the earlier April, like just Sacha mentioned. And in addition to that, I think this also creates concerns regarding the laboring fraud, which is also a concern shared by another neighboring countries like South Korea. So we already mentioned about this ongoing negotiations of the Asian countries with the US. And I think there will gonna be some back and forth on that. And as probably as requested by the US, these Asian countries might have to strengthen up their own country of origin rules to crack down heavier on transshipment. So I think that will impose every serious sort of problem question to my clients or many of the Chinese business community. Is what they are doing right now still going to work in the years to come, Is there better ways of doing business? Is there any sort of a solution to it? I think this is some very important questions to be answered, but I think it's way beyond just a legal solution. I think there's a lot of things that we have to take into consideration before we can just move on. Yeah.
Yeah, I mean, it's definitely there's a limited amount that lawyers can do on their own. There's no doubt there will have to be a politically negotiated solution to all of this. Such that from the Indian perspective, I mean, of course, in certain industries like in semiconductors, I mean, there's been a lot of diversification and change in supply chains. Anyway, we've seen, like, for example, Apple starting to move some of the manufacturing or a lot of the manufacturing into India. But with the introduction of these tariffs, I mean, across every country, there's needed to be a lot of support that the government gives to industries to help them through this uncertainty. A lot of tax incentives, you know, maybe the adjusting of VAT and things like that. I mean, what sort of tax-related incentives and support is India giving to industries, if any, to help them through this sort of tariff uncertainty?
So when I, let's give a little bit credit to our Indian government. Without even the tariffs coming in, we had, three major incentives in India, because our Prime Minister Modi also came on a promise of, encouraging Make in India. So, for the manufacturing segment, there are two great incentives right now. One is what we call the PLI scheme, which is called the Profit Link Incentive Scheme for the manufacturing sector, where your tax rate literally comes down to nil. And, if you're in the semiconductor business, if you're manufacturing iPhones for that matter, or some other, electric, what you call these e-vehicles. So, those sectors are being encouraged across the board in India, and not just because of the tariff. It's been for the last 3 or 4 years that, India's encouraged that. So that's one. The second is we have a special tax rate for newly constituted manufacturing companies, which are taxed at 15% in India, as opposed to a 25% corporate tax rate. So, that's the second incentive which has been there for a while. Last 4 years at least, it's been there. So the companies or manufacturing sectors which are not covered by the PLI scheme get covered at a reduced tax rates. So that's the second. Third, our government has been promulgating what we call the GIFT City, the International Financial Center in Gujarat, for leasing of aircrafts for other services industry. We are looking at including law firms coming into the GIFT City very soon. We have other IT sector companies setting up businesses in the GIFT City. So there have been incentives, dehorse the tariffs from the Indian government. So there is that cushioning. But as we move forward, I don't see the government of India not taking more steps to kind of cushion the impact of these tariffs. Like Pradeep said, look, 10% is a given now. Now what above that is the question. If we are able to stop it at 10, maybe 15, I think we would have done a great bargain, as I can see. And in turn, on a lighter note, the liquor consuming industry of India is very happy, because we will get cheaper bourbons, and we've already had a trade deal with the UK. We get cheaper malts now in India. So I think those people are the happiest right now. Maybe bike riding, Harley Davidson people are also very happy, because they're going to get a little bit of incentive to buy more bikes.
Great. I was going to say, in terms of the happiness among the whiskey consuming community, you could have counted me, but definitely not the Harley Davidson riding community. I don't think I've ever even been near Harley Davidson before. That's really interesting. What about the reaction of Indian businesses? I mean, have they changed their transfer pricing strategies, or the way that they approach, the way they do their tax planning as a result of these tariffs?
When I spoke to a couple of subsidiary, tax heads of subsidiaries of US companies in India. So, what their reaction was, look, this was announced in March, taken away in April. We don't know what it is now. How do I even change anything? Look, it's like Pradeep said, this fluid situation is bad for the business. And it's also difficult for the tax heads to take a call. Fortunately for us, 1st of April marks the start of a financial year. So I think they still have the entire year to calibrate and recalibrate depending on what we ultimately end up with. But as of now, it's been a wait and watch approach. Nobody's really done anything drastic in India to change their either transfer pricing methodologies or recalibrate the transactions that are underway. I think it's business as usual as of now. It could change. I really I don't want to be crystal gazing at this juncture.
No, fair enough. I mean, I think the proviso as of now would have to apply to virtually every comment that we've heard so far. I mean, who really knows what's going to happen? But on the subject of prognostication, I mean, I've already asked all of you to make some sort of predictions, but now I want to broaden out a little bit. And instead of making predictions, I'd like to a certain extent, put each of you into the driving seat and ask you in turn what you think should be done. And perhaps I'd like to start with Pradeep. I think in a sense, you've already touched on this topic, but maybe I'll ask you from the perspective of what you would do. I mean, how, in your view, should Asian policymakers do this careful balancing of protecting national interests and, of course, looking after your citizens and your supply chains and your businesses, but at the same time, balancing that with your necessary global interdependencies? I mean, every Asian economy is certainly dependent on every other Asian economy, certainly in the United States. How do you think that balance should be accomplished?
Wow.
Thanks
Thanks for that one,
in 30
Vinayak.
seconds or less.
Not difficult at all. Hearing you formulate that question just had my mind wandering to what Sachin said about the increase in consumption for whiskey, because in times of difficulty, that's where you have recourse to. But the short answer, like doing the best I can, is I think in the short term, the objective has to be stability. These tariffs have come out of the bolt, generated economic upheaval, a pile of uncertainty. And so what businesses and affected individuals are really craving for at the moment is stability. And I think, how do we achieve that? I think most governments around the world are prioritizing negotiations and dialogue with the US. I mean, I read a report that the United States has staggered its negotiations with a number of its trading partners into 3 phases. And the Asian countries are in phase 1, because as we've discussed, I think they've been quite seriously affected by these tariffs. And stability in terms of trying to quickly come to grips with and reach a deal, which, whatever its terms may be, I mean, 10% is the baseline. If we can keep it there, get anywhere close, whatever the terms may be, that in and of itself would help to inject much needed stability and certainty. So I think that's the immediate objective in the short term. And of course, allied with that is for countries which are affected a lot more than others. I mean, it would be prudent, I think, in the short term to want to take steps to shore up domestic demand, domestic consumption. Thailand, for example, has eased its monetary policies in this respect. You may want to carefully select public investment to sustain some of these demands, but stability is what in the short term you're aiming for. But in the medium to long term, and as we've discussed this, I think the objective has to be diversification. China, during Mr. Trump's first term accounted for, I think, 20% of trade with the US. By this time, I think that percentage has dropped around 14%. China has basically taken the view that I don't need to sell only to you. I can sell to the rest of the world. And everyone else, I think, is now starting to take its cue from China. And governments around the world are now seeing the benefits of, contrary to what Mr. Trump's saying, multilateralism, existing regional free trade agreements. There are a number of those in place. A number of those have now taken on added significance. Countries are trying to negotiate to try and reduce barriers to entries for each other's goods and services so that they can perhaps increase trade amongst themselves and diversify their supply chains and export markets. So I think in the medium to longer term, that I think has to be a strategy at the forefront of most Asian governments, at least.
Well, I mean, you certainly convinced me that some very impressive advocacy for that view. It completely makes sense to me. Hopefully, someone from the Singapore government will listen to this and pick your brain on what Singapore should do going forward. That does sound very sensible to me. You mentioned everyone following China's lead. Yang, I'm not going to ask you what you would do if you were negotiating with the United States. That's maybe too complicated a question, but maybe I could focus on one aspect of it, which is you mentioned that China's strategy in particular has been retaliatory tariffs and using that as a tool. Now, the United States has had tariffs in place before, and this is, I mean, although these levels of tariffs are unprecedented, tariffs are a tool that has been used by countries across the world. But in your view, I mean, are tariffs really a useful long-term tool for economic negotiation and rebalancing of economies, or are they just, in this modern world, are they just too disruptive on supply chains and on economies in general? What's your view on that?
Yeah, I think there's definitely gonna be some debates on the value of tariff. Trump himself definitely see heavy on the implication or the value that can generate by tariff. Most of us probably wouldn't agree with him. But I think some of us might see a tariff as a means to an end. Someone else is probably will think it's just an end. So, but for me, I think leave that debate aside. I think one of the things that Trump's tariff do is that it serves as a wake up call, not just for China, but also for other Asian countries, that the diversification of this market is essential. I mean, back in 2018 to 2020, we were seeing this old trend of China plus one strategy adopted by many of the multinationals. And this is basically a de-risking source of maneuver that we're taking by them to counter the first US-China trade war. But nowadays, I think for a lot of the Asian countries, I think they should be gradually yet firmly taking a stance on doing a de-risking US sort of approach. So at its core, I believe that it's just about market diversifications. You know, we can just look beyond just solely the US or the EU markets. We can strengthen up the intra-regional trade and using it as a buffer to reduce vulnerability to like external shocks like this US tariff. So ultimately, I think the goal or the negotiation position is that the Asian countries should be looking at themselves in the future where they will be able to ultimately reduce their reliances on the US markets. I mean, the Asian intra-region trades has full potential, so that's something we should never ignore. So yeah, I think ultimately, tariff, in my personal perspective, I don't think it's going to play a positive role in solving any of our pre-existing problems, it will probably just only encourage like market distortions or the rising prices. So I think it would be best if we can do it another way. Yeah.
Yeah, that makes a lot of sense to me. I mean, I think history teaches more often than not that cooperation gets you much further than conflict. On the subject of lasting changes, such as, do you see any? I mean, of course, the tariffs are a very fluid situation, and there's going to be a lot of adapting as the situation changes. But how many of the changes in the tax regimes of Asian countries do you think is likely to be permanent? Do you think there should be permanent tax changes? You know, and if so, what permanent changes do you think need to be made? So it's actually really two questions there. First of all, do you think there are going to be any permanent changes, and do you think there should be?
So when I'll go back to what I said at the initial stage, that the era of multilateralism seems to be, at least while dealing with the US, seems to be coming to an end in more than one ways. So depending upon the country's needs, you may have to recalibrate bilateral relations, not just with the US, but depending on the recalibration with US, with the other countries. For example, if you were to take a textile example, if, for example, the duties on China remain at, let's say, at 25%, down from 54, what is proposed, and I'm going purely hypothetically, and we are able to negotiate, let's say, a 20 or a 15% tariff with the US, then that will require, that may not require, sorry, any recalibration in India on that, or changing the policies in that. But I think what will happen surely amongst all nations is the ability to absorb and change their tax regimes depending on these tariff orders, because it's going to become the norm now. I think most nations in the Asian subcontinent, most Asian countries do not change their taxation laws every year. Unlike in India, we undergo a lot of changes every year. Tax rates change every year anyways. So we are used to having changes in tax rate, tax structures, incentive schemes coming out every year. Our annual budget or the Finance Act is always a 50, 60, 70 page document containing amendments every year. So we are used to it. But I think other countries will now have to have a more accommodative approach to how the US is reacting or how the world is reacting. One more thing which I think will take place is in terms of inter-se relations between the Asian countries. You will see a lot more cooperation than it was earlier. I think one of the effects of the Trump tariff war would be that we will look at alternatives like Pradeep had said, your supply chains will change or could change. But I think the reliance on or the trust deficit with other countries within Asia will stop. I think it's going to be a lot more, interstate trade between Asian countries would increase.
Yes, I mean, I think that's very interesting. I mean, I think that echoes something that Pradeep was saying, which is, countries are starting to discover that there are or might be other markets for their goods, and other countries or other blocks with which they can try to operate more multilaterally rather than bilaterally. So that is very interesting. In terms of looking to the future, Sachit, if I could just stay with you. I mean, of course, this is Trump's second and final term.
Hopefully.
Hopefully, well, there's some political questions about what will happen after any particular election, but assuming that this is his final 4 years, of course, we saw with the Biden administration, there was some rolling back of tariffs, but he maintained quite a lot of the previous administration's policies on that score, or at least that's how it seems from the outside. But do you think that a new administration is going to substantially change the approach? Maybe that's not something we can easily predict, but how do you think this tariff scheme or this tariff approach is going to be affected by changes in the administration in the US?
Look, I personally, I don't think too much will change, even with the regime change, because I believe the benefits for the US purely, and I'm not for the world right now, purely from a US perspective, the benefits of what President Trump has done would start materializing towards the end of his third year or early fourth year. So for a new incumbent, whether he's a Republican or a Democrat, to undo something which has been a positive development for a Native American would be very difficult. That's my reading of it, unless, of course, the projections which we are looking at, that even at the end of year 3 or the start of year 4, the effects don't start translating. For example, there is a high, if you impose a high tariff on imported electronics, but you are unable to manufacture them locally, then for the next 3 years, you will have a high cost imported goods. So the Native American may not like that. They are used to a cheaper iPhone than anywhere in the world. But if the effects start translating in America, jobs are back, goods are cheaper again, inflation is down or relatively better, then for a new incumbent, I really don't see anything changing substantially. There may be some alterations, but I don't see that.
Yeah, that's very interesting. I noticed we are getting questions in the Q&A section, but just before we go to Q&A, maybe I'll just throw this question out to whomever wants to answer it, because this is certainly a question I had when following whatever I could of the tariff developments, which is I could not for myself figure out whether the US new US tariff policy is a negotiating strategy or whether it was genuinely intended to revamp the US economy or the global order. It certainly seems from the outside or someone following it maybe more casually that the messaging on this has changed from time to time from President Trump, from the administration. I would just ask, Yang, do you have a view on whether you think this is a negotiating strategy or whether you think it's meant to rebound? Maybe a little bit. How do you see it?
Yeah, I think I will agree with Sasha that this is going to be a new norm. And I'm not saying this because I can predict the future. I'm not able to do that. But I'm saying this from our past experience, because we already mentioned about these sections 301 tariff. This was not something happened this year. This was something was imposed by Trump in his first administration. After that, when Biden took the office, he didn't actually just roll back on these issues. He rolled back a lot of Trump's policies, but not on this one. He even step up on the issues with China and are pushing forward for a more thoroughly decoupling in many of the sectors like the artificial intelligence. Some would actually describe it as a small yard with high fence strategies. So yeah, you've already talked about like if we are having a new administrations in the US, are they going to taking a same approach or are they going to do something different? My view is that they'll probably just stick to these roots. They might not actually do a taking measures that was as aggressive as Trump did. Hopefully not. But I think this perspective of a thorough decoupling between the U.S. and China in terms of the economic sort of a perspective. I think that is something that is kind of inevitable. But before the doomsdays eventually comes, I think we will still have to cohabit in this planet Earth. So we will still have to negotiate and find a way to do business. Yeah.
Great. Yeah. I mean, I think that sounds very sensible. I mean, as you say, impossible to predict the future, but that does sound like a reasonably sensible, if I don't call it a prediction, at least analysis of where things might go, even if the administration changes. I mean, I have my own doubts about whether decoupling the U.S. decoupling itself from China in any particular sector is even possible. But I mean, so there may be people in the United States hoping that they're able to do that. I myself doubt whether any of that is really possible. But let's turn to some of the questions that we've received. Some very interesting questions. My apologies to the questioners if I mispronounce your name. But Bao Munang asks, he says, in the mid-80s, I recall my economics professor explaining the world economy by giving an analogy. He says, when America sneezes, Europe gets a cold and the third world gets pneumonia. But with the rise of China as a major economic superpower, he asked, is the analogy still true? And I remember seeing an interview with India's foreign minister, Subramaniam Jaishankar. And Jaishankar made what I thought was a very interesting point where he said, listen, we're no longer in a world where really the world order is decided by one or two superpowers in a room alone together. It's going to have to be a lot more diversified, and the world order is going to have to take into account a greater diversity of views. That question isn't really addressed to anybody in particular, but maybe I'll throw it open to the panel. Anybody want to take a shot at this? I mean, is it still true that the U.S. has that gigantic impact on the world economy? Maybe there's some lessons from the tariffs on this question.
Yeah, I'll just jump in real quick. I think there's two things that I wanted to point out. First, Bob is correct to mention that China is a major economic superpower. But in terms of this status, I would like to emphasize that most of the times we are talking about China's manufacturing capabilities as a world manufacturer superhouse. So in terms of the analogy that he adopted, so is China actually a great market in terms of the purchasing power? I'm not sure. In fact, I think that why the U.S. is actually pushing on this tariff tactics is that they believe that China is not buying enough. So I think that's the first thing that I wanted to mention. But the second thing is, because we've already mentioned about the diversification, the market diversification is very important for all of us. So if you are taking the analogy, I mean, if American sneezes, do we actually have any other ways to prevent ourselves from getting pneumonia? Yes, I think we do. The antibiotics that we are going to take is the measures that we already mentioned, like having a free trade regional agreements, trying to open up new markets in Asia, and trying to build up, tightening up our economic strength so we will be not that vulnerable to external influence at the U.S. market or the U.S. tariff. So I think, yeah, there's other ways we can deal with this. We are not just like laying down just to waiting for the inevitable to come.
Yeah, that's
I'll just
good extension of the metaphor there.
I just wanted to chime in.
Yes, Sachin, sorry, please.
Yeah, no. I was just going to say that if it was just a sneeze, we would have probably dealt with it now. We wouldn't have worried. The US is now using a taser gun, and I think the repercussions are being felt elsewhere.
Yeah, I think you definitely need a more aggressive analogy. Taser gun might be the correct one. Yeah. Yeah, I like that. SL Ting asks, again, this is not directed at any particular panelist, but SL Ting asks, how should affected countries plan or prepare the future way of doing business with the US, knowing that Trump or a future US administration may, in SL Ting's words, throw another tantrum, I guess, or do something, maybe precipitous or substantial in the near future. I mean, can these countries live without doing business with the US? I think we may have addressed some of this in our discussion on resilience, but I just ask if any panelist has anything to add in terms of building Asian countries building resilience against any future significant changes in trade policy from the US.
Pradeep?
I'll have a go at it. I think we go back to the point that's been made, I think, at the outset and a couple of times thereafter. I think the tantrum, the way this has been characterized, I mean, it encapsulates this element of arbitrariness and the uncertainty it engenders. And for business people, that's just really bad. You thrive on certainty, you thrive on predictability. And so for now, at least, I think you're going to see people having to continue to do business with the US. US remains an economic superpower. It remains an important market for so many Asian economies. But increasingly, I think that importance is going to reduce, and by design. And I think the Asian countries and businesses in this part of the world owe it to themselves to take active steps to learn lessons from what has happened. Every time there's an economic debacle of this nature, there's pain, there's uncertainty. And the pain in this instance, I think, if I may put it this way, has been somewhat short-lived. It was announced, the tariffs were then suspended, but we're now living in this twilight zone where there's uncertainty. And things are basically at a standstill. And if you just project things ahead, assume the tariffs come into full force, the economic pain and the difficulty that's going to pose for so many people across the world, I think it's been well documented. And businesses and nations, I think, are going to take lessons from this, and they will take steps to ensure that the risks of this nature are minimized. And that brings us back to the other theme that I think that's been quite central to today's discussion, diversification. And China, I think, has led the way. I think in the days after the announcements of the tariffs, President Xi was in Southeast Asia, meeting with the leaders in this and the countries in this part of the world. China is a huge market. The Middle East is a huge growing market as well, as you can see from the increasing number of bilateral investment treaties. Countries like the UAE are signing with a number of other countries, including, I think, quite recently, Malaysia. So I think where we are now is the US remains an important trading partner, but I do expect its significance to, in the years and decades to come, to decline.
Yeah, so that's, to my ear anyway, sounds a very positive note. Out of all this uncertainty and the obvious pain that businesses are experiencing, that does sound a very positive note that in your view, there will be lessons to learn from all of this, and perhaps Asian countries can find ways of cooperating and sort of earthquake-proofing their economic structures, if I can put it that way. So we have a couple of other interesting questions. Let's see. Trump argued, Chin Kiaonar asks, Trump argued that by increasing tariffs, he's trying to boost American manufacturing and protect American jobs. Is this going to work for America, or will it backfire instead? Now, this sounds like a US-focused question, but no doubt that if I mean, it is going to affect. I mean, the outcome of that question, I think, probably will affect Asian economies. I mean, what does the panel think about that? If that is indeed the strategy, and I don't know if it is, but if that is indeed the strategy, do we think it's going to work?
Vinayak, I briefly touched upon that. Look, that is the stated purpose. I don't think the Trump administration's stated purpose is to destroy other economies. It's to save their economy. So I think that's their stated objective. Whether that will succeed or not, difficult to say. It also depends on how ambitious or how proactive are US businesses in restarting so-called manufacturing in the US. Because the whole point is that US is not manufacturing, US is just importing. Now, sitting in India or sitting in China or sitting in Singapore, we can't dictate US businesses. And I think the hunger in US businesses to restart will be a crucial factor. Whether the costs of manufacturing there are lucrative enough to restart that manufacturing. Because look, the offshoring happened because it was more lucrative to manufacture outside. And I think that's a very US question to answer. I mean, from here, we can just put timelines. Like I said initially, what we are hearing, it's going to take end of 3 years, early 4 years to see some results. But I really don't, think any of us can tell anybody that whether it will succeed or not.
Well, great. I mean, thank you for that answer. It's really, again, very comprehensive answer in an almost impossibly short amount of time. Because our panelists have been so terse and in answering these questions, I actually really think that we can get through probably every question that we have in the Q&A. But while I have you, we have a tax-related question. So as our resident tax expert, maybe you could take a stab at this. Genevieve Vaniyasingam asks, is there a risk of double taxation arising from the interplay between US tariffs and local indirect taxes in Asia, especially for multinationals engaged in cross-border transactions? How can business mitigate these risks? What are your views on that?
Definitely, yes. There is a huge issue of double taxation, and we are already facing that even minus the tariffs, and I'll tell you why. A couple of years back, US pulled out of a multi-country tax deal where they did not agree to taxation of digital services. As a result, all countries in the world which were dealing with the US on the digital data side started imposing what we call the equalization levy, or digital services tax in different jurisdictions. US, as a matter of reciprocity, started imposing tax on imports from other countries. We've still not resolved that. We still are suffering equalization levy, as we call it in India, digital taxation in other countries, and the US not giving credit for that in the US. So if your question is, will this have an impact on double taxation? Yes, it will lead to double taxation. It will then be on countries to cushion the impact or give relief in individual cases in sectors where they think this cushioning is required. But straight answer is yes, it will lead to double taxation. I don't see how it will, be saved from double taxation.
And no doubt you'll be seeing a lot of this fallout in your work. I guess we'll just have to wait and see how businesses, and certainly how some of your clients, can navigate around this sort of double taxation issue. I'm not sure there's a very easy answer to that.
In fact, Vinayak, I'll tell you, there is a dual level. One is the aspect of double taxation. The other is the tariffs, whether they will qualify as what you call an indirect tax, or will they qualify as a direct tax. I really don't know. The classification in itself will be a challenge now. So to give credit for those taxes becomes a doubly challenging experience. The double taxation leads to a double challenge. I mean, it's really that's how it works.
Right. Right. Well, we're coming to an end here, but I want to see if we can take we got a couple more questions. I want to see if we can just really quickly take these questions. The panel's already been, as I said, very terse, but if I could just ask for like sort of a very brief answer so we can get to both of these. Suzaini Abdul Hamid asks, will Trump's tariff policies create a two-speed Asia? Economies that adapt and those that are left behind. Throw that open to the panel. Anyone want to take a shot at that? I mean, no. I mean, no. It does involve some predictions. It's always dangerous to predict, but almost certainly there will be some economies, no doubt, that will struggle to adapt. Wouldn't there be?
Vinayak, what do you think? Let's give you an opportunity to share with us your thoughts.
Well, I'm certainly, as I said at the outset, I'm certainly no expert, but I think certainly from the Malaysian perspective, a huge concern in Malaysia is that there's not much we can do to adapt. The thing is that we can build those regional relationships and try to restructure our supply chains, and we're doing that. China's been a very supportive partner. So has India. And of course, we have an extremely special relationship with Singapore, that being one of the busiest trade borders in the world. But, by a huge margin, our largest trading partner is the United States. So I think that, certainly whether it may not be a question of adaptation. It may just be a question of to what extent can we survive. I'm not sure there's much that our economy could do about that. I mean, that's certainly the Malaysian perspective. I just want to really quickly take this last question. Maybe we can take one more question. Nikush Das asks, what long-term structural risks could India face if it mirrors U.S. tariff strategies, particularly in relation to defense procurement, supply chain integration, compliance with WTO norms? I mean, of course, I think we've discussed that not every country has the luxury of taking the Chinese approach, which is what you do to us, we can do just as well to you. Sachit, any chance of retaliatory tariffs?
Well, like I said, I don't think we at this stage have an option to go completely retaliatory. I think it will be more on diplomacy. We need the US support or US defense equipment. There is no doubt on that. Equally, the US needs our pharmaceutical industry. They need the IT services from India. I think it's going to be a hard bargain. And no offense to Yang, but the American so-called love in sarcastic terms for China may prompt President Trump to be a little soft with India. That's all we can hope for. But I think it's going to be more of a diplomatic parlay, a little bit of give and take. To the question, no, we can't have a retaliatory approach, because that's only going to backfire in the long run.
Great. Thanks so much, Sachin. We do. I know we have a final question. It's maybe a more complicated one than a short answer can give, but maybe you could just take this as opportunity for your closing remarks to close out this discussion. The US and China have come to an agreement. There are still imbalances in that agreement. In your view, what prompted China to agree to those imbalances? Or do you think this is a stepping stone to reaching what you were hoping for, which is a final, sensible, and more balanced resolution to this whole affair?
Yeah, I think we really have to kind of look at these US-China joint statement as an effort to roll back. It was not saying that the two nations have to finally agree on something. It was just that they agreed to roll back to this pre-reciprocal tariff stage. At that time, the US already posing a heavier tariff on China than China to the US. So I think this is not final yet. I think definitely, I'm not a psychic. I don't actually know whether or not the trade representative of China actually just insists on getting a 10% tariff. But I think that will be the goal. And I think there, as I said, this is ongoing issues, and there are a lot that we should be expecting to come in the days to come. So yeah, let's just hope for the best.
Thanks so much, Yang. And can I please thank you, Sachit and Pradeep, for what was certainly for me an amazing learning experience, a wide breadth of expertise. And I'll certainly be watching this recording back again to pick up on, I'm sure, the many things that were said that I missed out on, or whose significance I missed. But thank you so much, all of you, for joining us. Before we wrap up, I know we're running a little bit over time, but before we wrap up, a quick reminder to everyone listening. Thank you so much, everyone, for joining us. But a quick reminder that the 38th Law Asia Conference will be happening later this year in the beautiful city of Hanoi, Vietnam. So one of my favorite cities in Asia, from October 11th to 13th. Among many other topics, there will be a session on taxation. So if you're interested in being a speaker on that session, or indeed any session in the program, the call for speakers are still open. Feel free to submit your proposal, or if you're interested in attending, conference registrations are open. I certainly will be registering myself. We highly encourage everyone to attend. This is Law Asia's flagship event. And so attendees are going to be coming from the whole of the Asia Pacific region and even beyond. I should mention special discounts are available for current Law Asia members. So if you're not already a member, please do join. You'll get many benefits: reduced registration, reduced fees for registrations for other conferences, first-hand announcements for webinars exactly like this one. You can join online via the Law Asia website, or contact the Law Asia Secretariat for assistance. All details are available on the conference website. Please visit it regularly for any updates. I believe it's being posted in the chat as well. The Law Asia events team have posted they've posted these details in the chat during the webinar, and we'll see many of you in Hanoi. I'll certainly hope to see all of you in Hanoi, and to my fellow speakers as well. Hopefully we'll be able to meet in person. Hopefully I'll be able to meet our attendees in person at that conference. Once again, thank you everyone for joining us. Thank you, Yang, Pradeep, Sachit.
Thank you.
Thank you, Vinayak.
Thank
you,
you.
everyone else.
You guys.
All right.
Thank you, everyone.
Have a good one.
Bye-bye.
Thank you. Thank you. Bye-bye.
Bye bye.